Mike Buckius, the Gateway International Fund is up around 3% year to date. It's underperforming Japanese and European indexes, which are really flying because of the declining currencies. But that's not your goal, right? You're not gunning for those indexes?
That's right. With the Gateway International Fund, we're trying to build a risk-managed international portfolio. We have a core portfolio of European and Japanese stocks that tracks the EFA index, the European Far East Index. We sell calls against that portfolio to generate cash flow, and we use some of that cash flow to purchase downside protection. Typically, those international investments are much riskier than U.S. investments, so that risk management technique is an attempt to give investors exposure to those international markets without the roller coaster ride usually associated with it.
You're also giving them a nice 3.4% dividend yield. That's pretty good. How do you get there?
That's one of the advantages of having international stock exposure. We get to take advantage of a lot of those large international, multinational companies that have pretty high payout ratios, generate a nice amount of income, and have that supplement the returns we can earn on the equity side.
And what do you do with the currency? Because a lot of people are hedging it out. That's been a big winner for a lot of funds out there.
Yeah, that's been a real headwind. The dollar strength has hurt all sorts of international investments from a U.S. investor's perspective, and that's been a headwind for us as well. We have a process that lowers the volatility or the risk associated with currency changes, but we still don't directly hedge currencies. I think that seems to be changing. We've had a very long dollar run, and I think if the dollar starts to weaken a little bit against the yen and the euro, that should help our returns quite a bit.
The big if, of course, with regard to Europe is whether or not, or if, Greece leaves the European Union. How would that affect volatility and affect your fund?
You know what? It's affecting volatility now. We're certainly seeing that as the big driver of sentiment and investor perceptions in Europe. I don't know how it's going to turn out, but every day that drama continues to unfold, it's affecting volatility. If it resolves itself well, I think that'll mean volatility comes back in and markets kind of settle down over there. If Greece leaves the euro either voluntarily or it gets kicked out, that's certainly going to pick up volatility, probably around the world, but certainly in Europe.
But the point of your fund, of course, is for a steady return. So, I mean, even though there's lots of ups and downs, the potential for even more ups and downs, depending on what happens to Greece, you're going to be steady. Slow and steady wins the race, right?
Correct. Our option selling program converts that volatility into cash. So that cash is the way we want to generate returns, how we want to manage the risk of owning those stocks to have a consistent return.
All right. Thanks a lot for coming on.
Thank you.
Thank you for watching The Street.